Guys, I am back. Are we ready? Are we ready? Oh, there he is. Thank you for joining. I know, what's up? Okay, so we are about to enter into an exciting, point in GME cycle. It's been exciting for quite some time. So I cannot believe that it's been like, oh my goodness, since it was the lowest of last year. Oh, the hell! Can't even. Okay, it doesn't want me to do that. Oh man, hope it doesn't do it with that. Okay, so, all right, that's weird. Okay, so sorry about that. Okay, so I wanted to kind of like map out, right? Every April, what is the stock doing, right? And I want to see, is there any correlation between what is happening over here to over here? I guess there's a cycle to everything, right? Seemingly, it's been 4 or 5 year cycle, and I don't know why it happens that way. Of course, we kind of correlate this to a Bitcoin cycle as well, where every 4 years it does something, right? And so, GME typically follow what Bitcoin is doing, seemingly, right? Sometimes it doesn't correlate. Sometimes Bitcoin goes down and then GME goes up. So perhaps they're using Bitcoin to do that. So again, now that we are adding Bitcoin to our balance sheet, I think the correlation is going to be a lot more pronounced. And it's worth kind of like at least tracking, what the crypto market is doing, how it's been kind of trading so far. And so, I mean, even with this kind of, you see how like it's tracking what Bitcoin is doing. So perhaps again, when Ryan Cohen, trying to decide to buy into something using that, the cash pile that we have, perhaps he was researching, okay, what are those swaps? What are those, the most correlated asset? Okay. That trades kind of the same way as GME, or at least follows it, right? That's a speculation, obviously. I'm not him, so I don't know what he's he's thinking every single day. But I just feel like he found the swaps, and now that they cannot use Bitcoin against GME anymore, they're gonna have to think of other ways to swap this. Can they? I don't know. I mean, they have so many tools out there. There's so many connections, and especially access to infinite money, right? Fiat money. And so, how are they going to get away with this? I don't know. Maybe moving it to digital space is kind of like offsetting it a little bit here. An escape valve of some sort. But again, so the Fed came out and say how they're gonna do everything they can to support the market. So again, that's keyword for more money printing. Okay, so understand that, and so that's why today I'm gonna kind of go through Scott Bessent and then another opposite point of view as well on the economy, on Trump and all that stuff. But mainly, I just want to focus on the financial aspect of it, and also the tax and trades and all that stuff too. So it's gonna be a long show. But I do have somebody working on my backyard, so if there's any noise or anything, but it's pretty quiet at the moment. They're here already, So if there is any noise, apologize. But also too, my mom might pops in anytime to ask. So just in case I'm needed over there somewhere. Okay, in which case I'll just play a video. I'll come back though. I'll come back. Promise you that. All right, Michael, what's up? Not yet. I will wake you up when it's Monday, okay? All right, so so real quick here, I have kind of like looking into the price, the cycle, and I'm sure people have been kind of looking at this too, but I feel like, okay, so this is every April, okay, Eastern, whatever, before the day before or the week after. I mean, the week after Easter. So I kind of map it out. You could see the green lines, vertical lines here. Vertical? No, horizontal line. No, not much DD, you guys. The DD is done. You know, we all know what's going on with GameStop, with the company. I think the hard work has already been done. So to speak, as far as like making the balance sheets stronger, and the strength of the balance sheet is undeniable at this moment in time, and so that's why you see a lot of perked up interest in analysis of the baseline of GameStop. Like, you know, okay, no longer we are discussing about how the company may go bankrupt. Now it's more like, okay, how low can the price go, right? What is the low ball, and I mean the floor of this stock, and whether it's overvalued at this point or undervalued. So that's the battle for the markets to go through, and whatever turbulence that is coming in. It really doesn't affect the company at all because, again, balance sheets matter, you guys. Yes, fundamental matters at some point. And now more than ever, fundamental will win out because, you know, fundamental of the other companies out there in the S&P 500 and all that stuff, they are overvalued. And so people are going to flock into value stock for a change, right? And that's the business cycle, right? For the longest time, you see that the stock was trading at this lower point. Why? Right? And then you have to go back and look at the balance sheets and all that stuff. This is the era in which Roy and Kitty was up and kind of talking about it incessantly. You know, that low point of the company back then, the balance sheet was not good at all, you guys. But at least they have some asset, they have some, you know, but there's still risk of bankruptcy at that time, at that point in time. That's why, again, high risk, high reward. If you have a conviction in the leadership, okay, in the you know, in the way that the company is setting up to grow over the decades on end, you're gonna see the value of this company right now. And it's almost like it's trading at this price point right here, right there. You see how, look at this, you guys. Like, people who are short-term minded, I'm telling you, they're not gonna understand this at all. At all. Because they're short-term. They're like, oh, you know, 1 year, one spike, I'm done. Right? Which is fine. If that's what you want to do, that's on you. I'm telling you, you know, whatever you do with this stock has no effect on the stock at all. It's going to do what it does. And you're going to have to watch and see, you know, whether you participate in it or not, the stock will do what it does. Because the demand is coming. Okay. Institutional level. The demand has been here the whole time, but people have been blinded by the price action. That's why they don't see it. That's why they're complaining. That's why they're Like, oh, price is so low, price is so low. Pretty soon they're gonna complain, oh, I should have buy at this low. I'm telling you, a couple of years from now, they're gonna be wishing that they're able to buy GameStop at $20, $30, under 50, under 60 even. And so right now, people are blinded, people are distracted, people are, just not focusing. And that's what they want you to do, is that they want you to be fearful of the economy, saying that the recession is coming, you better prepare, which is, sure, yes. You should have been preparing 3 years ago, okay? That's what the recession was 3 years ago, because this money's been slushing around and it's not getting into mainstream, okay? People are working, the working class. So it's been trickling up to the top 1% for sure, that they're doing well, and now they want it more, right? And so that's why they're throwing tantrum at Trump to trying to, crash the market here on purpose or not. I don't know. Who knows? Maybe he's just, trying to throw the monkey wrench at the market here to at least try to keep the price of the stocks, of the whatever, at a manageable rate, instead of like an overinflation, hyperinflation type of deal here. We're not going to go into a hyperinflation unless the Fed's going to print more, $10 trillion more, right? Then yes, you're done at that point. So just buy Bitcoin and then wait for your money to flow, right? Flow into that. And so, yeah, I mean, to me, it's pretty simple, because now you have Bitcoin to contend with. Now you have Bitcoin to at least say, all right, if you want to print money, I'm buying Bitcoin, because Bitcoin's going to go up for no apparent reason, or seemingly anyway, to people who doesn't know. But anyway, why am I going on and on? Sorry about that, you guys. But anyway, again, just my logic, you guys. Like, this is all my opinion. No financial background here. Just here chilling with you guys. Whoever willing to listen. And you could do whatever you want with your finance here. I'm here just to at least giving you my opinion on things, and please don't take it too hard, okay? I've been wrong before, I will be wrong again. So, but to me, in my opinion here, I've been convicted in this stock for a reason. So those reason is like, hey, company's doing well. You have Brian Cohen, you have money. Company doesn't have any debt, okay? And in the grand scheme of things, they're not really growing, but they're not, going under either. They're not drowning in debt. And so if you look at the data of every companies out there, they are ahead. They are above many other companies out there that are operating, 100 times more, revenue or whatever, right? So with those type of company compared to this one is much safer at this point in time. Like I said, if you don't have debt to drown you, you will be able to survive better than the rest of the companies out there that are drowning in debt. So your growth is going to be a lot better too when the economy turns back up again, right? And so you even grow faster than any other companies out there. Even though you're small, I mean, like what, under $10 billion in market cap. So that's I know that's pretty good in my opinion. Anyway, right. So let's look at this. What I was trying to point it out is that you guys look at this, how downtrend, like how down it was. So like, people would have been like, goodness, bankruptcy, right? The negative sentiment back then is enough to push the stock up here, right there, right? Because the negative sentiment is so large that they're like, I'm calling on your BS, right? When people are like, okay, all right, let me just buy. I mean, can you imagine getting GameStop at $2, $3, $4, $5 even? I mean, come on. You know, of course, Ryan Cohen saw the opportunity here. He bought around here somewhere. Okay? He bought around here somewhere. He was like, hey, I saw something that is undervalued. Nobody wants GME at the time. I saw an opportunity to come in and operating as a chairman or, you know, having some direct influence on the company in and of itself to try to drive the value from within. Okay? And so when you have that type of leadership, you do not ignore that. Okay? Keep it simple, stupid type thing. Okay? And so that is the catalyst. That's what they don't want you to look into. Even the movie, The Dumb Money, if you watched it, that was not the cornerstone of what drives the stock price. They want you to believe that, oh, it's retail. No. It's the asymmetrical bets, okay, that was so egregiously happening, right? On the short sides, you know, whether it's short interest or whatever, however they're doing it, where they're egregiously shorting this company to oblivion, even though, you know, they were able to beat it down so much. They want to drive this company to bankruptcy. Ryan Cohen was the catalyst of the opposite. Okay. And so now, you know, 3-4 years later, you get to see, you know, how much of the molassesity, I can't even say the word, you guys. It's been molastic, to say the least, okay, after the drop. And the narrative is that, you guys, that's what the media wants you to believe. It was this dumb money, right? This dumb people who doesn't know anything about the stock market buying it up. I'm not saying most of the, yes, are, like, some people are just there because they didn't know what's going on. They're like, oh, it's going up, so let's buy more. Right? Yes, I know some of them are that. But the original, you know, GME investor, who probably still be here, I'm sure, is waiting for this moment. The moment in which, okay, the company's going to do well. And I'm sure that asymmetrical bet, egregiously short, egregiously ignorant, egregiously, you know, saying that this is a meme stock. Don't look at it. Forget about GME. Don't look at it. Balance sheet is stupid. Look, they're not operating at a positive. When every other metric out there, except for, you know, the revenue coming down, okay? Of course, they want you to look at the revenue only, right? When every other metric that is the matters, the bottom line, you know, like people say it all the time. The bottom line is, that shows the significance. Okay, when people are like, the bottom line is, you're not profitable. The bottom line is, you are profitable. Which one is better? Or you would much rather them confusing you, oh, the company is bringing in $10 trillion, but yet, what is the PE ratio? Oh, PS, what is it? But yet, what is the bottom line? Oh, the bottom line is just $2 million. Like, what's the point of operating, you know, of having, you know, a revenue of $10 trillion, but then you only get to keep $2 million? Can you believe that? I mean, come on. So with that metric, right, people are going to be like, oh my gosh, you know, this company is so great. Look, they bring in $10 trillion, but yet, oh my goodness. Anyway, I'm just exaggerating, you guys. But I just see the ridiculousness of people who just wanting you to at least, look into their lens, which is incorrect in my opinion. Obviously, you have your own opinion if you wanted to, form it, have it, have your own conviction. If you think that this company is shit, short it. Please do it. I mean, buy puts, buy everything, do the swaps and everything too, right? I encourage you to do that. Sure, right? I mean, that's your bet, right? That's your that's your conviction. Be my guest. If you're dumb enough to do it, please. I'm sorry. I'm just, a bit on edge today. Because people are stupid. I mean, not you guys though. Not you guys. Not you guys. Just those who are not listening to me right now. Anyway, so with that though, again, the asymmetrical, the negative view is enough to push the stock higher, and it's gonna do it again, you guys, because people are gonna capitulate. People are eventually gonna be like, GameStop is not that bad, right? And then the people, because you've heard it so much that, right, that the company is going under and all that stuff, and then all of a sudden it's trading at like $100, and then you're like, what did I miss, right? And so that's when it's gonna encourage people more and more to look into the company more honestly, a little bit more, less skewed to the downside. Now the upside is also overhyped as well. I don't want to overhype, but not underhype it either, because this is exciting to me. This time period, obviously, because I know how explosive it could be, just on the nature of what is happening to this company for the last 5, 6, or even the decades, right? Never before you have a company where, there has been so much press, but yet so much suppression as well. With suppression comes, just picture this. If you push the balls, underneath the water long enough and far enough, when you let go, right? Again, inevitably it's going to go the other way. That's how I feel about the pressure it's been putting on this stock for so long. So with that, yes, explosion comes easily. But again, the suppression has been 4 or 5 years. So I'm not saying they don't have any tools. They do have tools. But is it gonna break the markets? I don't think so, you guys. Right? So don't get into that space either, where you think that this company's gonna break the market, or I'm gonna hold until, $100 million a share. It's like, that's impossible, you guys. Come on, be reasonable. But I'm willing to say yes, 1,000 can be possible, and whether they're gonna allow it to go that high, that's another place to be. Kind of speculating mode type thing. So just be careful, be smart as well. I really think that, even without MOAS, even without, that short squeeze narrative, the company in and of itself is worth everything, in my opinion. Okay. Right now, anyway, it's worth at least taking a look at, For people who are still negative about this, I encourage you to look at the balance sheets, form your own opinion. If you could do plus and minuses, if you could do your own budgeting on your life, your own expenses, then you would understand what this company is trying to do. Simply, they're just trying to be profitable and less expenses, right? The less expenses you have in your life, the better for you to grow into the future, right? And if you're consolidating your debt, inevitably you're going to go a lot higher in the future. Yes, short-term pain for long-term gain type of thing. If you keep loading money from your credit card, and loading the company with debt, saddling with debt, of course you're going to be stunning your own growth in the future. And in turn, you're stunning your own shareholder growth. So Jimmy is doing the right thing, in my opinion, to set themselves up for success later on. And I think they're reaping the benefit right now at the moment. Slowly. Yes, slowly. It's very slow. I know. I've been here for a long time. So I understand people's frustration. I have a higher cost average. I heard Morans ask, why is the cost average so high for some people? Well, let me answer that for you. Okay. I was stupid. Okay. Not really, but time. I just went all in, or at least like the majority of my portfolio at the time in my Roth, I had a large sum. Okay. Close to, I don't even want to say the number, but it's around 50,000. Okay. Because I was growing it. I got lucky on AMC. Luckily, I sold those, right? I should have sold it at the $72. That would have been amazing. I would have doubled that actually. So I had close to 100,000, you guys, like on that. But anyway, I thank goodness I have kind of do the research on AMC, and that's when I have that amount to put onto GME. However, I did just slowly. I'm not doing it all at once here. But then the majority of my share was around this right here, and so it could have been a lot higher. But I slowly trickling down over here, buying at every close to the dip as much as I can. Of course, with that particular broker that I had no that's another thing too. I had no way of picking the price. Whatever the price that the platform told me in the morning, that was it. And so I didn't get to choose the price. And so that's probably another reason why my cost average was so high. I mean, not high to me. Like to me, what, $34? Not high. I mean, to me, it's still undervalued. 34. That's my cost average. Something. Say 35. Round it off. But even then, I mean, look at this. Like, I'm pretty close to my cost average here. And on top of that, I have more time. I have way more time to accumulate as well, right? And so, this year I have the ability to add more, but I wanted to do the taxes first and then, make sure that I'm not earning too much this year. And then I'm going to be able to, because I did some trading. So I just want to be safe. What I'm planning to do is taking profit from crypto. But again, it depends on when crypto blows up. You guys, come on. That's my origin into the stock market. Before that, I was like investing in Doge, all that stuff. And got some and learned to be a little bit smarter, a little bit more conservative. So that's why I went into the stock market world. Like, owning companies instead of just tokens and stuff. I know the growth is a little bit slower, but I still look for stocks like this to at least grow. I mean, I'm young enough to take some risk here, and I don't have any kids or anything like that, so it's easy for me to take that risk. For people who have family, obviously don't take that risk. Your kids are more important, so be responsible. If you have kids in your life, obviously they are the apple of your eyes. There should be anyway. And so you're gonna try to do everything you can to support them in life, ushering them, to the top as much as you can. I mean, yeah, responsibility of the parents is immensely appreciated or underappreciated, depends on who you are. But just know that you're doing God's work here, on this earth. Anyway, why am I gotten to that point in time? I have no idea. All right, so let's stop babbling and let's take a peek at the price of Bitcoin real quick here. Seemingly it's backing up again, but again, there could be some terrible news, okay, and negative news still, where they might still drop the price, okay, of Bitcoin one last time. This could be the one last dip, then the rip. Okay. Now, the global money supply that I typically talked about is, hold on, it's coming up where okay, this one right here. So if you look at the global money supply, again, this is a liquidity, okay, in the market. Money's already been printed. This is push, this offset 180-day forward, okay? And so it's been kind of tracking the Bitcoin price. The more money slushing in the markets, or in the world, Bitcoin just seems to follow that pretty well. So now we're at this point right here. So each line, it's May 1st. This is where May comes in. That's why I said May. That's why people like sell May and go away type thing. So end of May, you could see the all-time high again of Bitcoin. Right? If this, again, like it will break that $100,000 line. 1 month, you guys. 1 month. I'm telling you, this can be life-changing for most people if they know how to play it right. And I think this is what Warren Kitty see as well, right? That's why it's like April 20th, kind of towards the end of the May. Perhaps this is when he's going to accumulate, he's going to buy the calls on Gamestop. Okay, again. And just post it. You'll update. So we have 1 more day, obviously. Everybody waiting for that. And again, me speculating, you guys. I don't know the guy, obviously. Admire him as a trader, as a educator on the stock market, and doing it the right thing, doing it the right way, in his own way, having his own conviction, his own style of investing. So that's what it's all about, you guys, is to find your own style. Okay, whatever it is. If you think it's too much for you, then don't do this. Okay. Doesn't matter if you could gain or have the potential of gaining, hundreds of billions of dollars. No, if you don't know how to play it, obviously that gain is not going to be for you, because you wouldn't know what to do with it. Right? Everyone wants a windfall, but when they have a windfall of money, they don't know what to do with it. Look at trade, right? If you don't know how to deal with managing the money that you have, you cannot, sustain that lifestyle. And so you have to learn to at least, understand that this thing is not going to last forever. Nothing lasts forever, you guys. Eventually, things come to an end, and you have to learn to move on from that. So yeah, life is full of ups and downs, but as long as you are keeping moving on, just to move on, you'll be fine. Okay. So I know people would love you to think that the economy is going under, that Trump's gonna be the one that breaks things and all that stuff. But look at the data, okay? Look at the what is happening right now in terms of money slushing in. The wall of money is coming back. So yes, the stock market's gonna go back up. So either you take this as an opportunity to buy more Bitcoin or whatever. Of course, this is in relation to Bitcoin. I really feel that Bitcoin has this special place in the global market sense because of what is happening right now, where money printing is going to happen no matter what, because they cannot not have extra money, because extra money has been created to the true, like, quadrillions of dollars here slushing in the derivative markets. They cannot solve that. And so, is this Trump's fault? You could say that, sure, but every government, every administration print money to support themselves. Not you, no, not the market. I mean, mainstream has been screwed for quite some time, you guys. So at least you have a president now who's trying to at least remedy the situation. But the situation is just way too effed up anyway, so you can't even, fix it. So the only way to do it is to break it down, right? Somehow, right? So Bitcoin is a solution, obviously, for now, in my opinion. Yeah, I'm not saying it's not going to come down in price, but if it comes down in price, if you have some money, buy it. Don't freak out, okay? Make sure you have a job, right? Hopefully you have some jobs here to kind of sustain your lifestyle, whatever, pay bills and all that stuff. But after that, buy some, even $1, $2, $3. It's okay. It's going to grow 10 years from now. Okay, so with that, let's see. Okay, so here's my petition. I know I've shown it quite a bit. Anyway, so I'm down 22,000, you guys. I'm in 22% in the red. Oh my God, the financial condition that I'm in, the calamity. No, I'm not. I mean, I don't need this right now. It's in my Roth, so I have some time to kind of contemplating what to do with those. And of course, it is what it is. Okay, so let's talk about the bond market. Obviously, rate wants to go higher because it used to be over here. Okay, so TLT is a indicator of long-term bonds issuance or whatever. Typically, when people are fleeing to safety, they go to bonds, okay? Because even with the 4%, 3%, 2% or whatever, so currently it's like 4-point-something% for the 20 years. So there's no kind of flight to safety yet. Okay, there's no evidence of that. That's why, again, I feel like the recession is not here quite yet. The financial calamity that people are predicting or want you to believe is not here yet, because of that. And even Scott Bessent too. So let me just play this one here. And I'm gonna speed him up a little bit. He talks pretty slow. Now I'm slow as well, so I'm just gonna speed him up a little bit. And yeah, we'll talk about this. I'm back. What just happened?
Mr. Secretary, thank you for having us inside the Treasury. We appreciate it.
Thanks, Brian. Glad to have you here.
Yeah, no, this
especially on April 15th.
Yes, tax day, of course. And of course, Mr. Secretary, we do sit here on tax day. Consumer confidence, it has been under pressure Everybody loves to look at eggs, one of their favorite barometers. They're at record highs according to the CPI. Got the 10-year that has climbed to about 4.5%, has backed up a bit. And Mr. Secretary, I just had the CEO of Constellation Brands, they make Corona beer, telling me consumers are pulling back. Level set for us. What's the state of the economy through your eyes right now?
Well, Brian, let's back up a little. Egg prices, I believe, are down 50, 60, 70% off the highs. That we inherited an egg inflation when President Trump came into office. I think egg prices were up 200-something% under the previous administration, and just through culling fewer hen houses and some imports, we were able to alleviate that. So, check. And consumer confidence, we're seeing some concern in the survey data, but we haven't seen anything in the hard data. So, very, very solid job market last week, up 228,000 versus an expectation of about 150,000. And we have lots of CEOs come in, especially from financial institutions, since we're here at Treasury, and they're seeing solid credit card spending growth. They think the consumer's in good shape, corporate's in good shape. So in my prior life in the investment business, what we were not good at, and I think it's very hard to be very good at, is predicting the macroeconomic numbers. But what we did was form a mosaic. We called it the micro, so a bunch of micro data points drives the overall economy. And from right now, I see nothing alarming from the micro data points.
What do you say? You mentioned in your prior life, of course, you were a hedge fund manager, long career. We have Jamie Dimon out there saying a recession is likely. Just yesterday, Goldman Sachs CEO David Solomon said the prospect of a recession has increased. You know these leaders well. Mm-hmm. What do you say to these folks that are worried about a recession?
Look, I think that the news cycle, for whatever reason, is focused on tariff policy, and the Trump economic policy that I'm part of the team that's in charge of implementing it is really a three-legged stool. So tariffs are getting the majority of the publicity now, but we were having very good luck, or very, very good progress. It's not luck because it's been a lot of hard work on the tax bill. So the tax bill is moving through the Senate, moving through the House. I think we're going to have some permanence for the 2017 Tax Cuts and Jobs Act, probably by 4th of July, and I think that will give people certainty. And then the third leg is deregulation. So the tariffs came in quickly, taxes by midsummer, and then we think the deregulation, which could be substantial savings for households, will kick in third, fourth quarters.
Why do you think then?
So that's important, you guys. So he's telling you right there, okay, that financial condition, and he's about to talk about that, is going to be alleviated through those policy implemented. Yes, just stock, if you have some stock that are out there overvaluing, the Nvidia of the world out there, yes, you're gonna be hit for sure. But again, the big guys know this. They already sold out of their position already. But yet they're telling you to buy at a high, right? I'm telling you. Now, when you're supposed to be buying, what they're saying, oh, it's a recession, don't buy yet. See what I mean? So, know the trick. These people, JP Diamonds and all that, he just sold his own company. Okay? His own stock, JP Morgan, JP Chase. I guess he's ready to retire. But again, these financial heads usually are, misleading you. So your job is to believe in the right person. Or at least, try to believe in the right person. Not believe so much, like to understand the numbers yourself and to understand the economy based on your own life's path, okay? The economy, again, to you guys, if you talk to your friends and your friends like, oh, you know what? I can't even go out. You think the economy is doing well or not? Like, do you need somebody to tell you on TV? Like, oh, actually, you're stupid. You don't know what you're you're feeling. You're feeling. It's like your world is too small. Of course, the economy is doing well. No, that's not true. The main street is usually the leading indicator of what is to come. If your friends cannot go out to eat with you and complaining about how much expensive things are, then stock markets will suffer in the end. Okay, moving forward. The only reason why the stock market goes up was because of the M2 money supply. too much money supply pulling into the market, okay, printing out of thin air. And that's where the inflation comes from, you guys. It's not an act of God, just like what Ryan Cohen tweeted years ago. Like, it's not an act of God, you guys. No. It's because overspending, okay, deficit or whatever, trade deficit, whatever you wanted to call it. It's not even, the government spending for sure is also a kind of a fuel that added to the fire, and quantitative easing from the Federal Reserve. Okay, now the Federal Reserve actually have more power than Congress, than Trump, than any other governmental heads out there. You know why? Because they have control over the money supply. And that's where the power comes from, that have been kind of eroding your buying power for centuries. Okay, this is not like just happening 2 years ago or even 4 years ago. Just all of a sudden Trump comes in and then boom, inflation. It's like, really? Do people really think that? Of course, people think that because they believe in the narrative. So stop believing in the narrative. Go research yourself. Do your own, mathing. Okay, if math doesn't do well in math, then I'm sorry, you're just hopeless at this point. I don't know. Just learn how to do plus and minuses. That's it. I can't tell you how many people in my life that hates math for so long. I'm like, maybe this is where my edge is that I love numbers. I like to see it. I like to work with it. I like to think about it. So in a way, I'm kind of lucky in that sense that this type of topic doesn't bores me to death. That's a double-edged sword too, you guys. Like, typically when I talk to people, I feel like I'm just a deer in a headlight sometimes. Like, why are they not listening to me? It's boring. I know, I get that. But man, it's the most important thing. I heard Michael Saylor interview, and he have a good important point. It's like people spend 40,000 hours, okay, 40,000 hour, 40, to earn money, right? But they would not spend 100 hours just to learn how to keep it. Let me say that again. They would much rather spend 40,000 hours making money rather than spending 100 hours learning about how to keep money. Oh, keep some of it, at least some of it, right? So that's where people are misconstrued, misaligned. And again, distraction of life, you want things to be a certain way. You want that instant gratification. You want to impress your friends. You want to impress your wife, girlfriends, or whatever, right? All of that just to distract you from at least knowing the truth of what should be more important to life. I'm not saying money is everything, you guys. No, it's just that the world that we're living in right now, if you're not concerned about your finances, you're gonna be the one that are left behind. Because no matter how smart you think you are, unless you know the Federal Reserve system of how monies work, and how you've been kind of like misled into thinking a certain way about the economy, so that no matter what you do, or no matter how much money you have, you seemingly that it's not enough. Like, why do you feel that way, do you think? Well, because they've been devaluing your dollars, devaluing your asset. Okay, because they have the ability to print dollars. You don't. You and I don't. Like, unless you try to counterfeit the dollar bill. But even then, you run the risk of getting arrested. Right? So, but anyway, why am I going so far to that? The point is, Bitcoin is fixed supply. Period. Right? And so that's the response of the financial crisis, because that crisis is going to continue until people realize that, oh, hey, there's a better way here, which is Bitcoin. I think that's why, again, the government all over the world is trying to slow the progress of that realization, from younger people, to get into Bitcoin and all that stuff. And creating all kind of confusion to confuse as many people as possible about Bitcoin, blockchain, the technology. Let's throw meme coins out there. Let's throw, some fart coins just to make it so ridiculous for people to be like, Bitcoin, nah, I heard it. It's such a scam. It's overhyped. It doesn't worth this much. Whatever. It's a lot, you guys. I'm telling you. All of those information, it's there for a reason. So it's your job. It's your job to know which one is the right one. Okay? The only way to know that is for you to sit down hours on end learning about it. Once you do, you cannot ever go back, because your friend's going to be distant from you. No one's want to talk to you about it ever in your whole life, because it's boring. Nobody wants it, right? Nobody wants to hear it. So you are the fortunate few who's listening right now. I don't even know how many people are listening to me right now, but I wager maybe 4 people. There you go. So I might try 4. Yeah, 4, 5. Sure, 5. Even then, some people probably are falling asleep as I speak right now. It's okay. So let me stop talking and listen to Bessent.
The likes of Jamie Dimon and David Solomon, why would they be concerned?
Look, that's their job, is to be concerned. But again, I think that there is all this chatter on tariffs, and what we're worried about. And I come from Wall Street. I think Wall Street can continue to do great, but we are focused on Main Street. And my cousin who lives in coastal Georgia called me and said, congratulations, the gas here is $1.98. It's below $2 for the first time. So I think that we've got to look at it kind of on a holistic basis. Everything that's going on. There's something called FCI, or Financial Conditions Index, and that's a combination of what's the stock market doing, what are interest rates doing, what's energy doing, what's the currency doing, and financial conditions, they are still in a very good spot.
Some experts I've talked to, Mr. Secretary, they acknowledge that gas prices have come down, but they, in the same breath, say that is because the economy is slow. Where do you stand on that?
Well, look, everybody wants to have it both ways. That 2 weeks ago, there were all these stories, and as you know, Brian, that this year, I've tried not to talk about the stock market, because the stock market is really a long-term proposition, and it's more fun that when it goes up in the short term, less when it goes down, but that people should be in it for the long term, and over the long term, it is the best asset for retail investors. But what I've been focused on is lowering energy prices and lowering the 10-year yield. So 2 weeks ago, 10-year yield hit 3.90, and I said, oh, well, Secretary Bessent's getting what he wanted, but for the wrong reason. Then it popped up last week to 4.50, and it's the end of the dollar, it's the end of the U.S. as a reserve currency, and in my mind, it was just a bunch of over-leveraged speculators who were getting stopped out.
So no foreign countries dumping treasuries?
We actually saw the opposite last week. We had 3 big auctions, and 10 and 30-year auctions, which are when foreign buyers tend to come in, which is where they can buy in size. We actually saw very good foreign accumulation of 10-year and 30-year bonds.
Of course, as you know.
So yeah, when you look at the data, right, I'm sure, he has. And again, people are going to be like, well, you can't trust this administration. They're lying. Like, okay. The only way for you to know that they're not lying is to look at the number yourself. I don't know. I mean, again, it's a lot of numbers here. Of course, sometimes it's kind of exhausting, right? You have to just like, they're lying, so can't trust them. Boom, done. And they work on that for sure, They give you that nuggets of, point in which, yes, it could be skewed or biased or whatever, but the only way for you to know for a fact is to go through the number yourself. Okay. And so I trust this guy to be true for some reason. I have no idea why. Just a intuition I have. Okay. Haven't looked at the number myself either. But what he's saying here is that the treasury markets that, people are so freaking out about, when when it's coming down like this, where, people are not buying into the stock because of the tariffs and all that stuff, not stock, treasury market because of the tariffs, people are pulling away their investment and all that stuff. That's not the true story, you guys. Like he was saying, it's a leverage. And we know that this market has been leveraged to the till. What is leverage? People just borrow money from other country to get into the US market, which is, Japan. We know this, I'm sure. Roy and Kitty know this, right? And so he found those swaps, and then it's like, yes, trillions and trillions of dollars was borrowed from Japan because it's like, what, zero interest pay. They got zero interest money from Japan, and then they dumped that into the stock market of the US. Any return above 1%, they would be in profit, right? And so when you have that for decades on end, imagine how many trillions of dollars slushing from that, from that point. And so, typically they buy US Treasury with that. Because U.S. Treasury, the Treasury, the 20-year, whatever. This one right here, I'm sure, all of the bonds, not just one, obviously. And so when Japan raised the rate, what happened? They need their collateral back, and so they have to sell Treasury, okay, to get back the principal, because now. The rates of Japan going up like that, where the spread of the rate in between is very small, so they cannot make money doing the same scheme, okay? Because not only that, Japan doesn't have the liquidity to let the U.S. or U.S. hedge fund or whatever, whoever want to borrow or have the access to borrow that way, typically probably like bankers, world banks out there that are doing these things. And so when there's no money in the market because of the higher rate of Japan, you need liquidity going back into Japan. So that's how I understand it. And yes, I mean, if they do this enough, there's not enough leverage, right, in the system, it could crash the bond market. For sure, yes. But is it going to decimate the bond market? I don't think so, you guys. There's still more money. Remember, M2 money supply. And so this is not good for people who bet against who are using this tactic to make money, but it's good for you and I, because you and I could buy the bond at a lower price. They don't want that. No. This peasant cannot be buying this pennies on the dollar. So that's what they're afraid of. I'm telling you. That's the simplest way that I could come up with for you to understand. Like, this dynamic, these tools that they have, when they said tools to, keep the market safe and all that stuff, it's not safe for you, because yes, I know your 401k is going to take a hit, but eventually if you could buy pennies on the dollar, of somebody else's stupidity, right? Then younger generation could buy stuff for the cheaper price. Companies that are on sale, like good companies that makes money, profitable, all of that. Okay. And so when it's like that, then the either middle class or even the poor, right? If they know how to do the stock market, right now it's a lot easier to buy into any asset on Robinhood with just $5. You could really start your portfolio that way. So younger people are going to have a chance to at least build some wealth and be less of a burden for them in the future, in retirements or whatever, right? So it's about the next generation, you guys. Like, we've been so, like this generation, I feel, been decades of just greed, just, like toxic people running the country. And now we're at the end of it and people are just scrambling, like who's to believe right now? When all you should just be simple. Don't go on debt. Don't just be responsible. Just, do what Ryan Cohen is doing with the company. I'm telling you, this company is responsible. Like, that's what you want in your corner. Person like that, you want in your corner. You don't want people who overspend. No. Sure, it's fun. But for what? 2 seconds? That's it? That's all you want? 2 seconds versus a lifetime of not having to worry about money anymore, right? So, of course, all of us want that financial freedom. And, GME has that already as a company. Okay? So that financial freedom for the company, people need to recognize. And if they don't, they're going to go into the company that are shiny. Like, oh, look, NVIDIA. Oh, look, AVGO. Yeah. Oh, look, Tesla. Not saying those are a bad company. I'm just saying it doesn't grow as much. It has the ability to grow. But yeah, I mean, boring company is the company to at least starting to look at for younger people. If you're young and if you have more time than money, just like Michael Saylor was saying in an interview, volatility is a gift to younger people who have more time than money. Because if you could find something that is volatile and something that is stable, something that is, of course, he talked about Bitcoin, but I'm also going to include GME with that too. Because the leadership obviously is the most stable leadership that I could find in the market right now. Not to say that many companies out there are not doing that, you guys, okay? Sure, if you could find one, go ahead. Go invest in them. The key idea that I'm trying to get you guys to understand at least is the long-term aspect of it. It's the stability of the, leadership that no matter what is happening with this, tariffs, tax, and all that stuff, that the company is going to have a good leadership to weather that storm, okay? And so if you come with that conclusion with any company that you own, you're perfect. I mean, then the next step would be just accumulate as much as you can, know what the fair value is for you, right? Depends on, the whatever metric that you're using. If you're using just only revenue to calculate those, I encourage you to use a different one. To me, it's a book value, okay? And so some people probably use a, debt to income ratio. That's also a good one too. But yeah, some people combine those two, whatever you're using to determine, okay, if it's go over this price, I'm not going to accumulate. If it comes under this price, I'm going to accumulate whatever price that is. I mean, it could be 30, it could be 40, it could be whatever. And also, yes, I don't mind having the exit plan if you want to exit it. Yes, go ahead. Take the gain. Whatever gains you think, 10%, 15%, whatever. That's up to you. But for people who've been here for a long time, we know what the value of this company is. And I think it's more than that, right? Just my own opinion, based on, what I'm hearing, seeing for the past 3 years. Close to 4, actually. Most people work on getting debt free first before financial freedom. Of course, yes. I think that's the first step and the most important step too, to get debt free, for sure. And the fact that Jimmy did that 3 years ago and people were laughing at them. Who's laughing now? Right? Who's laughing to all the way to the bank right now? Jimmy. Because we have a stronger enough balance sheets to show people, hey, pay attention, okay? Quietly, right? We're not even put any press. And whoever comes here is quality people. Quality people in the sense that, they're not here just for the price action. Okay. And so, and to teach people a lesson too. Like, look at this, okay? When people see this, they're like, oh, I'm going to buy right now. And then when it comes down to over here, oh, I'm a back holder. Like, oh, you guys are a back holder. And then they stop. They stop coming back here because it's too boring for them, right? When they're supposed to be accumulate over here, accumulate over here, accumulate over here. No, it's too boring, right? I'd rather buy calls and I'd rather buy whatever. And all the while, the call buyers are bleeding for 4 years because, again, it's skewed, you guys. It's skewed to this option seller. Okay? So if you're option seller, you probably be in profit. Yes, you might cap your growth, but at least you have a stable income. Okay? If that's what you want to do, you could do that too. We have enough shares to go, you guys. I'm telling you, if this is true, that, they've been naked shorting, they've been doing this for decades, then there's enough shares to go around to where you like infinite, right? Why did you think it take, like over here? In this time period, you guys, we were able to raise close to $5 billion. $5 billion. Like, have you ever wondered that? Why? And how much do we have to dilute? Not that much, you guys. Okay, $5 billion. $5 billion. That's not astounding to people. That's not speechless to people. This is impressive, okay, with the size of the company. Imagine if Jimmy would, not Jimmy, imagine if, do you think Apple could raise $5 billion in a year on the stock market without, at least crashing the price of their own stock? Way more than this. No, I don't think any company could withstand that. Because again, the demand is there, guys, and you could see, demand coming from where. Hold on. There is enough demand, and even more. Excuse me. Okay, I'm human. All right, let's go. So we're looking at the institutional ownership. Now we're down to 5 short only institutes. It used to be 6, now it's 5. They're falling off, you guys. Okay, and keep in mind we're only fighting 5 people over here. 5 people, 5 institutions. Right there, and then these are long and short, so they're doing that, buy and sell and all spread or whatever, put spread. So there you go. Okay, And then if you go down, I'm sure you've seen this one quite a bit. There you go. You've seen an increase of share. Now, this one is because of the split. So technically, this portion here should be here. Should be here somewhere. Okay. Because this is the 4, so it should be here somewhere. So now institution should be over here. I don't know why they only take into account the share. Okay, so just be aware. Yes, before the run, there was a lot of institution here, and then they did kind of dump. Okay, dump over here as time goes on. So they dump, and then they just started to buy over here. So just think about that like that, where they sell at the high, and then starting to buy at the low right here. Okay, so the price, is this the price right here? So around $28 a share, in which they're starting to buy. They've been buying around this price point right here. So that's how I look at this, and even more now at this price point. So very bullish in a sense. That's why you see the graph that way. So again, follow the money, right? Understand that, and you're less likely to be bogged down. And if you're a long-term shareholder, you would look for this type of thing to say, okay, institutions are selling. Maybe I'm looking to slow down my buy rates at this point. If you want to support the company still, right? In terms of support the company, in terms of share price here. But you see this type thing. Hey Manuel, what's up? Anyway, so and then when they turn up the buy price right here, you increase your buy rate. Yeah, again, strategy. If you don't have it, you're more likely to get eaten by the volume that is to come. All right, so it seems like they still have this reported as RC Venture over here. So keep that in mind. Perhaps you're going to have to trim something out here. So this is just the recent reporting. Yeah, people adding, you guys, like 1,000, 10,000, 20,000. Not many people are shaving off their, this one's shaving off some. 1 million shares there. So these are April, all April. And 2 shares, what the hell? Crazy. Yeah, look, 3 million shares, 3 millions of shares. April. So again, that's why you see dark pool activity picking up again, because these institutions are buying in the dark pool. Yeah. So they're preparing for something, or it could be just the bondholder, right? That they are dropping the price, and then they bought it back. So now they're buying it back. Okay. So that is a good thing to see for your company, to have institutional ownership coming in. It's a good thing, you guys. Not every institutions are bad institutions here. Okay. Not every hedge funds are bad hedge funds. Not every private equity are bad private equity. Just because they carry the name private equity doesn't mean that. Only a handful that seemingly have the political power, okay, buying their seats on the Senate. People are, making laws, rules, and all that stuff. So that's why they have the power for now, until people wakes up. And then they're like, oh, let's vote them out type thing. So change is inevitable for sure. So just be prepared for that. It's okay. It doesn't mean that your life's gonna end or anything like that. It's just life. Sometimes you get to do things, sometimes you don't. So just be prepared. Anything that could happen in the future. Okay, so should I finish this whole thing? I have no idea.
Mr. Secretary, China is the second largest holder of treasuries, and how things are going on the trade front, does that keep you up at night? The fact that the Chinese could sell treasuries impact negatively our economy?
I could burn down my house if I had an argument with my spouse, but it's not going to do me very much good. So that, if they started selling treasuries, they would. They'd have an effect on the price, but more importantly, they accumulate dollars. And what are they going to do with the dollars? So if they sell treasuries, then they would have to buy RMB, and it would strengthen their currency. And they've been doing just the opposite. They've had a weak RMB or yuan policy, so it really serves no purpose for them to weaponize treasuries.
If you saw them trying to weaponize treasuries, how does the Treasury Secretary respond?
Look, we have a big toolkit. We do buybacks. The Federal Reserve, I think if treasuries hit a certain level, or if the Federal Reserve believed that a foreign, I won't call them an adversary, but a foreign rival, were weaponizing the U.S. government bond market or attempting to destabilize it for political gain, I am sure that we would do something in conjunction with each other, but we just haven't seen that.
So that's important, right? He's saying that if the market goes down, there's going to be a buyback. Okay? That's the tool that they are telling you. And it's inflationary. Okay? I know it's like, oh, I thought it's recession. It's like, well, the inflation is coming down, right? Remember the true-flation? It's coming down in terms of percentage. And so, yes, the inflation will be here, but not that to the extent, okay? Unless they're printing money to buy back those bonds, okay? To prop up the bond market. But he's just saying they haven't seen that yet. Because the narrative that, oh, China is going to be the superpower and all that stuff. No, you know why? Because they rely on people buying their goods. The economy cannot survive without buyers. And so the product that they make to the world here needs buyers. And if there's no buyers, they can't survive that. I mean, population in China is a lot, and I'm sure, if you live in there, you would understand it more. I've never lived in China, so I don't know. But from outside looking in, seemingly, yes, they have all the resources to survive, but not thrive in this economy. If the US say, okay, we're not going to buy anything from China anymore, type thing. So, yes, the global market's gonna also be shaken up by that. I mean, can they not buy stuff from China? Not quite sure, you guys, because we're gonna suffer as well, but not by much, because we could buy it from other country. Like what, Venezuela, whatever they're making over there. And so, with countries that are that making the deal to lower the tariffs or whatever, it's going to be benefited from that, and China is going to be isolated in that sense. So that's the goal. Obviously, again, it's a complexity that I don't even know where to touch on. The trades and all that stuff. It's just too complex for me to really dig into it and understand it from that level. So I'm willing to say at least, okay, treasury parts or whatever, that makes sense. If China were to do it, they're doing it to themselves. Like they're shooting themselves on the foot, because every single country out there needs dollar to settle trade. For example, again, now Bitcoin might be the one if every other country agree to accept Bitcoin and all that stuff. But that's also good for GME, right? If people are starting to use Bitcoin as a baseline for federal world reserve currency, either way, good for GameStop for sure. But this turbulence, I'm telling you, it's going to pass. Your job is to survive, okay, in this time, and not doing stupid things to lose your capital. Betting on shit that doesn't work, and make sure that any investment that you're getting yourself into will carry you through decades from here. If there's some calamities happening, right? Yeah, I think the best case scenario is for Bitcoin to survive. I feel. I don't know. This is my bet here. I bet you anything, Bitcoin will still survive.
You mentioned tariffs. We're less than 90 days out from the tariff pause ending, Mr. Secretary. How many deals do you envision being done by the time that pause would lift?
Yeah, well, Brian, let's set aside China. There are 15 large trading partners. We set aside China. There are 14, and we're in rapid motion and setting up a process for the 14 largest trading partners, most of whom have very large deficits. So in 90 days, are we going to have a complete a formal legal document done and dusted? Not likely, but I think if we follow the process, we could have substantial clarity on those 14 away from China in terms of agreements in principle. And then once we reach a level that we've agreed on, and they've agreed to lower their tariffs, lower their non-tariff barriers, currency manipulation, and subsidies of industry and labor, then I think we can move forward.
Would tariffs still be in place, though, as part of any agreement?
Depend on what they have on offer. I'm telling everyone, bring your A game. And also, they should all know, for the big countries, President Trump wants to be involved.
What does a first mover get?
Well, traditionally, first mover gets the best deal. So I'd encourage everyone to come fast and come with a great deal.
Have you talked to your counterpart in China?
We did an introductory call a couple of months ago. We haven't spoken since. I'm not sure who from PRC will be. Next week is a big week in Washington. It's the International Monetary Fund World Bank Week. So I know that People's Republic will send someone from finance, probably the PBOC, People's Bank of China governor. So they will be here. I may bump into them. We don't have anything scheduled.
How much is the president willing to go beyond 145% tariffs on China, or is that the ceiling?
Look, I think no one thinks that these are sustainable over the long run, but with President Trump, I'm not going to give away his negotiating strategy on a widely viewed network like Yahoo. So I think as with President Trump, he gets maximum strategy because he keeps everything on the table all the time.
What I imagine can't help, Mr. Secretary, is that on his trip to Vietnam, China President Xi Jinping said tariffs, quote, are unilateral bullying. I mean, I can't imagine that helps this process at all.
Look, also, I think the Chinese trade minister said the tariffs were a joke. And I don't know, maybe Chinese have a different sense of humor than I do, but I don't think there's anything funny about it. But I also don't think there's anything funny about the intellectual property theft that they've done, the blockage that we've had on reciprocal trade with them, the tariffs that they put on, the subsidies that they do for labor, for industry. So I don't see anything funny about it.
What's the best endgame scenario for the relationship with the U.S. and China in terms of tariffs?
Well, Brian, for your viewers, and I used to teach economic history, so just give me a moment or two. There were a lot of big trade and currency deals in the 1980s. President Reagan did Japan auto deals. Then there was something called the Plaza Accord, the Louvre Accord, and what was important and different about those was in the 80s, our economic rivals were our military allies. So most of the Europeans and the Japanese, and that there was the Soviet Union, and then China, but China really wasn't a force back then. What's very different this time, and we are in uncharted waters here, is for the first time, our largest economic rival is also a military rival. So we are going to have to deal with this in a different way. Now, I think that the Chinese, I think they would acknowledge, but they've been reluctant to do it, and every macroeconomist who follows China, who I know, believes that the Chinese need to do a big rebalancing. They are the most unbalanced economy in the history of the modern world, and they favor production and manufacturing over consumer. And relative to their share of world population, relative to their share of GDP, they export more than any other country ever has. So the first contour of a deal would be for them to take steps to increase consumption, help households, and stop the subsidy to the manufacturing sector. And so a good deal would look like they rebalance toward more consumption, less state-subsidized manufacturing. In the U.S., we have a bit less consumption, and we bring back a manufacturing base, and that could work very well together in a symmetric way. But we haven't seen any interest on their side to do that.
Sounds like a lot needs to be done.
In my opinion, that's like important too, right? To kind of touch on a little bit here. Because again, when people talk about like, oh, China is the superpower and all that stuff, or second best, they're only talking about the GDP, you know, like the money aspect of it. They don't even talk about the well-being of the, you know, people of China, like Chinese people. And typically, again, like they're the powerhouse on manufacturing. There's no denying that, but it's government subsidy because they want more production out of their population. Because again, it keeps the top, you know, dictator richer, right, more wealthy and all that stuff, so that they can more power over the people. And so people in China don't have, you know, the freedom that, you know, we have here in the U.S. So that's why that's the imbalance that he's trying to at least place on people's consciousness. I don't know. Make me think, right? So hopefully people are this deep at thinking about, you know, this economy thing where, okay, so China needs to increase their consumption, meaning that promoting consumption on their end, okay, where they are going to buy more stuff from us. You know, what are we making? I don't know. Missile. I don't know. No, just kidding. I don't know, like just some you know, cars or whatever, but they have their own cars, so not quite sure. But I think what he's trying to kind of touch on is that the overall makeup of the economy of the two countries is imbalanced in the opposite. Okay, so he's just trying to balance the manufacturing here versus consumption over there. Increase consumption over China, promoting, right? Well, we'll see, like, and then increasing production over here in the U.S. And when people are saying, well, nobody wants to make those things, like, no, we don't make those things. We just make stuff, right? Better stuff, like whatever stuff it is. You know, typically, again, like big machinery or something like that to help people. But that's what the market is supposed to figure out, you guys. So the government could only do so much stuff to promote that growth, right? And it's very tough balance here because people are just like, you shouldn't be doing that. Okay, what are you going to do? Like going back to the same system that doesn't work for anyone except the top 1%? Or no? Or should we try something else new, right? And so innovation comes from necessity, you guys, okay? Why do you think Bitcoin exists? Because people are fed up with this. It's a solution to inflation problem, right? It's a solution to controlling problem, central bank controls, okay? Why do you think they're trying to suppress it so much? Okay, so understand that, and then you're like, okay, when people are trying to suppress something, you better looking into that because that might be the solution to all the problem that is happening. Again, because it's less control over money supplies and all that stuff. Because imagine if Bitcoin were to be the world reserve, right? They cannot print more Bitcoin. So they have to solve the problem in a real way. Currently, world governments out there, all they could do is just print money. Borrow more. It's like, okay, all I have to do is just raise the debt ceiling and then that's it. Poof, problem solved. Do you think you are better off or worse off ever since you were born? When your parents are much more in a better position than you. This is the first generation that this is happening in America. And people don't realize that.
Mr. Secretary, to reach a deal with China?
Look, these are two big economies. I think the good news at the end of the day is that President Trump, Chairman Xi have a lot of respect for each other. They've been in contact before, and they've done deals together.
Best and worst dinner for your...
Okay, anyway. I'll let you guys finish that video. I know I've been kind of quite a bit. Goodness, how long have I been here? Okay, so this is Jeffrey Sachs. Of course, you have a different point of view. I got this video from Lionel. Thank you. I know, the opposition of what Trump is proposing, obviously. Again, different perspective here. You could take it as you wish. I'm sure he has a good points to be kind of learned from here. It's quite a long video, huh? But let me have him talk real quick and then I'll be back.
Policies. It represents spending relative to production or earnings. We call that an identity. I teach it in the second day of my course in international monetary economics. Trump never made it to the second day. So he says, you're running a trade deficit. Look, they're all cheating me. But all that's happening is the United States is outspending its national income. And you can look at the national income chart. You can add up consumption and investment and government spending, and you can subtract off gross national product, and lo and behold, what will that equal? Not approximately, exactly, that will equal the current account deficit, which is the comprehensive measure of how much you spend on goods and services versus how much you sell in goods and services. So the United States runs a current account deficit because it spends more than it produces. Why does it do that? We have a big credit card in the United States. It's called the national government. The US government spends about $2 trillion a year more than it takes in revenues. What it's doing is making transfers to the American people and to American businesses. It doesn't tax Americans for those transfers because, here's another little fact, because the congressmen that vote on the budget got into office by being paid for their campaigns by rich people who don't like taxes. So the political system says spend, but don't tax us. So we run a chronic deficit in the United States. That spending goes out either as transfer payments or goods and services, and that's more than our national income, which is about $30 trillion, and our spending is about $31 trillion. And that's our trade deficit. And for that, Donald Trump blames the world. Okay, I fail him for this if he were my student. He's my president. It's a little weirder, because when he did this, in 2 days, the world lost $10 trillion of market capitalization. By the way, where did it go? Did it get transferred from here to here? No, it got destroyed. Why destroyed? Because trade, something also the President of the United States doesn't understand, is mutually beneficial. So if you stop trade, everybody loses. It's not that one side wins, the other side loses. He cannot understand that concept as a guy that traded real estate in New York. So his idea is somebody had to win, somebody had to lose. But what happened when he made this announcement was $10 trillion was wiped out worldwide. It's not that the US went up and they went down. No, everybody went down. Because the whole world system is based on a division of labor, and he's breaking that division of labor into pieces. So then people said, this doesn't make sense. Even the very rich people that gave him the money for him to get into office started saying this doesn't make sense. The hedge fund managers who were his big campaign contributors, Elon Musk, who paid for his election and became prime minister, he said this doesn't make sense. And then the markets said this doesn't make sense. Not only $10 trillion, but as the finance minister said, interest rates started to rise because people began to dump U.S. Treasury debt.
The safest thing in the world, apparently.
So interesting what happened. It's not quite true that he reversed things. First, he left on this 10% tariff, except for one country, for China,
145%,
where he raised the tariff rates. That's because the United States has a deep, neurotic attachment to China. The U.S. political system hates China. Why? Because China's big and successful. And so that the U.S. hates. It's a rival, it's a competitor, and so this is the one thing he left on. Now he's going to mess up everything with this too, because in a trade war between the U.S. and China, China wins. China does not depend on the U.S. market very much. It's about 12% of China's exports. China will do just fine. It's just dumb policy. There's no more, sorry to say it, there's just no more explanation to this than that. It makes no sense. Now, it raises, if I could, just one last point. How can this happen when it makes no sense? And that, people should understand, we are in one-person rule in the United States. Our political system is in a state of collapse. What President Trump did is an emergency decree. Everything he does is an emergency decree. Literally, you can go on to whitehouse.gov and then follow the menu to executive decrees. And there are dozens of them. And each one starts the same way. With the powers invested in me as President of the United States, I hereby declare A, nonsense, B, nonsense, C, nonsense. Because he's king. Those powers are not invested in the President of the United States. They're invested in the Congress. You read Article 1, Section 8 of our Constitution. It says that all duties originate with the Congress. And specifically in the lower house, all legislation has to start in the House of Representatives. But the U.S., starting in 1945 after World War II, became a military state to a large extent. And so it sprinkled in its legislation emergency, emergency, emergency. And Trump doesn't have to prove anything's an emergency, he just has to say something's an emergency. So suddenly the trade deficit became an emergency, and on that basis he issues a one-person rule. Even his aides don't know what he's doing. You raise one final interesting issue, which is that the market recovered about $4 trillion when he reversed. Anyone who knew that 5 minutes before made billions. This is not the cleanest government in the world, I can tell you. I'd be hugely surprised if some people didn't know just a bit ahead of time, starting with members of the U.S. Congress, by the way.
Look, we'll get into the more general issues about protectionism and the end of globalization question mark in a minute, but I think what's happening and the directives coming from the White House is such a perfect example of what this panel is about. I'd just like to say on this, just for a few more minutes. Minister, is protectionism always a short-term aim, and does it always come at the expense of the longer-term gain? Donald Trump hasn't said it in public, but apparently in private, during his first term, he was asked about the problem of the U.S. national debt, and his answer was, I don't care because I'll be dead by the time it's a problem, and apparently that's also his approach to the climate crisis. So is this protectionism coming from the White House a short-term fix which is going to hurt America in the longer term in terms of how it grows?
It's not a fix. It's apparently a quick fix, but it's fundamentally flawed, as Professor has very clearly stated. Look, protectionism is nothing new. If you look at post-global financial crisis, the number of annual trade restrictions have gone up dramatically. In fact, like last year, there were over 3,200 trade restrictions. That is almost 11 times higher than what it was pre-global financial crisis. So this has been a trend, but what we have seen over the past week or two is clearly a new level. This goes beyond some protectionist measures, trade restrictions. This goes into something, an all-out trade war. So that's really worrisome, because if you go back, again, I mean, if you look at 20 years to global financial crisis, global annual trade growth was 2 times world real GDP growth rate. So in a way, trade was the engine of growth. Mm-hmm. Now that engine has been slow. So if you look at post-global financial crisis, global trade growth barely kept up with real GDP, global GDP growth. So that's no longer really one of the kind of like a strong engine. But I think the way things are now, if current state of affairs is sustained, we may end up actually protectionism dragging global growth. It is not only growth. It's really, there are many, additional fallouts from this type of policies.
Absolutely, yeah.
Yeah. So the answer to your question, this is not a fix. This is a fundamentally flawed, policy perspective. Obviously, countries have choice. They always have a choice. But we would rather, see world moving back to rule-based, multilateral framework, where everyone benefits. I think I agree with Professor. Over 1 billion people since 1990s have been lifted out of poverty, predominantly in Asia. I'm talking about absolute poverty here. And that's largely thanks to, trade and growth associated with that trade. So
yes, it's true that in Asia, like every other country are doing much better than the US. Yes, the US has been kind of like declining, wouldn't you say? Like you've been here for a long time. I've been here for a long time, so I know the decline that I could see within the last 20 years. So, I don't know. Again, like, so at the expense of the US? I mean, look, how many homeless people do you see around? Like, yes, it's the richest country in the world. Why? So, I don't know if it's flawed or not, whatever Trump is doing. It's just, again, it's a reaction to the symptom that we experiencing in the economy. There's no quick fix to anything, you guys. This deterioration has been decades worth of neglect from the top. People who are making policy, making choices, making worse investment, whatever, right? That it's not, looking forward to the next generation being better off than their own parent. It's like, so if you neglect those type of policy that foster innovation, growth, and real growth, not just monetary, talking about well-being of a citizen over here, that, okay, do you promoting something that will keep your population happy and willing and able to create more goods and services in order to, foster the units of their own community. And we don't have that anymore. We have these big corporations that is just sucking the value out of the, little guys, little, shops here and there. And that's what the growth that was not fostering for decades on end. If you look back decades ago, what keep the economy? Well, in my opinion, I don't know. Again, you look at, I mean, I wasn't here 40 years ago, so what do I know? But if you look at back in those times, there's manufacturings and, we are the manufacturing of the world. And, yes, there's sweatshop labors and all that stuff, but still though, the life, it wasn't that bad in a sense. Of course, it's a matter of perspective, you guys, okay? It's a matter of perspective. I know, if you are a happy person, you're going to look at the world as a half full, glass half full type thing. So I'm not trying to doom and gloom people here, you guys, but just a perspective of, global trades and all that stuff. It's complicated to say, oh, this is a terrible policy versus other ones. Well, terrible for who? In perspective to who? I'm sure it's terrible for people who are working in a manufacturing industry here in the US. We used to make car, we used to make TV, we used to make whatever, right? My dad used to make, TV on Sony, and high-paying jobs, right? Was able to buy a house with just one income. His wife went to school at that time. And so one income could really support the whole family, buy a house and all that stuff. Comfortably, with vacation and everything too. And it wasn't that much, you guys. Like, he was able to work at Sony for 25 years. And then, poof, they moved the manufacturing to Mexico. Right? So, again, who's lose there? And after that, he has to find work and all that stuff and pay less, doing different things. But had Sony been in the country for the next 30 years, imagine how many people would be lived out of poverty too. So here in the US, and again, at that time, obviously, there's a lot more jobs to go around. You could really, again, when people are saying, well, who would want to do those jobs? Well, there are people who willing and able to do that, or desperate enough that they will work in the assembly line, my mom actually here, she working at Sony. That's how my dad and my mom met. And they, my mom was like out of high school, and then she was working at Sony for a couple of years before they met. But she was working at the assembly line, drilling on TVs and everything, making TV, those big ones in Sony. So, with that, you created income, and at least, they were able to survive. But after that, after they got married, my mom just went to work something else, went to school, getting a different degree to do something else. But my point is that my dad was able to support her going to school and have enough money to buy a house, to down payment and everything. Yes, the house back then was, guys, like so cheap, more cheap comparison to this time period. But that decision obviously was decided, and it was a good decision. Can you imagine, like, if they're still renting, not owning anything right now, they wouldn't have the life that they have today, honestly. So again, real estate is a good place to be if you want to kind of achieve that ease in financial freedom. But again, it's a big part, right? Financial, I don't know where I'm going with this, but my point is that, life used to be better. Why? And so here in the US, now every other country, even Cambodia, even Thailand, they're doing much better here than here. So of course people would naturally be like, you know what, I want to retire elsewhere, not here. And so when it not used to be this way, you guys. So everyone was flocking into the US for a reason. So understand that. Okay, so let's see. Should I move on or should I continue? Let's continue for a bit.
It is worrisome that we are now experimenting policies that may actually reverse some of these gains, which I think were very important. 1 billion people out of absolute poverty cannot be underestimated. It's quite significant. Now, admittedly, trade do cause geographic dislocations, but the solution is not protectionism. The solution lies more internal sound policies, structural remedies, but also you can deploy tax policy incentives and other things to address, dislocations in regions caused by, global trade openness. So it's not a level, but protectionism will create more inequalities. It will create bigger problems. Already you've got significant headwinds for global growth. Aging population, high global indebtedness, impending climate crisis. So protectionism is going to be yet another big blow to long-term growth outlook. And that's why growth is barely, sustained at 3%. I think the risk is that we will move to a new era where per capita GDP growth will almost disappear if we continue down this path.
really interesting what you say about protectionism having fallout in other sectors, and we will get onto that about how it might affect cooperation on the climate crisis, global health, et cetera, et cetera. But let's use one country as a particular example about how a nation can react to protectionism. So we have the US tariffs, which in 90 days will come into effect beyond the 10% that Donald Trump has placed. Let's take two rich countries. UK and Singapore will stay at 10%. Bangladesh and Botswana will both go up to 37%. Laos will be 48%. Syria will be 41%. Lesotho in southern Africa will be 50%. In 2023, the US exported to Lesotho $7.33 million worth of goods. Lesotho in that same year exported to the United States $228 million. The US GDP per capita in 2023 was $82.8 thousand per person. In Lesotho, it was $916. Gentlemen, how does a country like Lesotho deal with the protectionism coming from the US? Minister?
Well, look, protectionism is an external shock, meaning it's not a decision by, the counterparty. It's essentially, so how do you deal with it? I guess you focus on regional integration.
Hey, Carlos. Okay. I love Jimmy too, but okay. We need the kitty. Okay. Will people get mad if I don't? No. I don't think we need Rowan Kitty. We didn't need Rowan Kitty over here. No. See, I don't know where you get that exactly. There you go, man. I so agree with that. We do not need Kitty. No. Even if he doesn't pose, the stock is gonna just do what it does. Sure, it might not spike, but the company's doing well. So, like people are going to realize, like you might, again, to me, if people are thinking that Jimmy needing Rowan Kitty, it's because you are buying. Do you have shares or option? If you're buying option, obviously you're gonna get antsy. Obviously, because you're gonna be, down. Short term too. It's like I know people probably buying, a weekly, weekly call option, hoping that this week is going to be the week. Don't do it. Unless you know what Rowan Kitty knows. Don't do it. Unless you know when the stock's gonna spike, don't do it. If you have shares, you have nothing to worry about. I'm telling you, you have nothing to worry about. Unless you want the money now. Okay, if you want the money now, good luck. I don't know when it's gonna go up. If he doesn't tweet, sorry. Gotta wait longer. So that's my attitude. And no matter what though, you have to prepare for the downturn too. What if he tweets and then it dropped 20%? You think that won't happen? Of course it will happen. You know why? Because again, people are fearful. People are, listening to these type of rhetoric that, it's gonna, bring financial calamity. Right? And then they just sell. Who's to say that that's not going to happen? But just keep in mind, again, if you see GME down at 20, 10, 15, or even $1 from now, are you telling me you're not going to buy everything that you could? If you woke up Monday, Rowan Kitty tweet, and poof, immediately it goes down to 1. Does that mean that the company is shitty? Does that mean that this balance sheet means nothing to you? Right? So what you're fearing is that, it's not going to go up. Okay. But what you're not understanding is that stock go up, stock goes down. And you can't explain that. So if this stock needs the tweet from Rowan Kitty, then why shouldn't it blow up already? He's been tweeting for the past what? Like since here. It's been tweeting here. Right? December or something, right? And so if you have that narrative in mind, obviously you're gonna be like so worried about what is to come. I'm telling you, I'm so convicted in this stock that, like I said, even with these type of discussion, it is looming. Jimmy's gonna do well. You know, I'm not quite sure what the price gonna do, but for sure, the company will have the cash to withstand whatever that is going to come. Okay. And if you don't realize that, I don't know. Learn to be a little bit more patient. I never heard the press say anything positive about. Right. That should be the red flag for you to be like, I wonder why. Right. Now, if you believe in the press, then yes, be worried, please. If that's what you're believing, I want you to be worried that this company is not going to do well. Because again, your own conviction, right? Because if you see the price coming down, you're not going to be like the rest of us where, yeah, I want cheaper stock, right? Because, people who've been accumulating investor of, long-term investor of this company love to buy on the cheap, okay? Buy on the dip, right? Because they know that they're not going to sell for the next 10 years. So who cares? If it's dropped, the difference between $15 versus 20. I'm here for the long term. Okay, good. So nothing to worry about. All you have to do is just worry about the income, right? Because every quarter, every 3 months, you have to follow, okay, earnings is important for a long-term investor to keep whether you want to add more or slow down and buy something else, right? Because if you see this declining, some people use this metric to go buy, right? And some people, I love looking at the bottom line for myself. And so if the bottom line comes up positive all the time from now on, doesn't matter if it's down a little bit here, but is it positive? If it's a positive earnings, then yes, I will continue to buy. And if it's increasing shareholder equity, I will continue to buy, right? Because I'm a shareholder. I want my equity to go higher in the company, okay? And of course, again, price to book is important as well, okay? Are you good on your price to book? My price to book is 3 times. I'm still holding right now, okay? Right now, you have the opportunity to buy close to 2 price to book, okay? I think 2 point something price to book. So much better opportunity than my cost average. So to me, if I have more money to put into GameStop, obviously I'm going to buy more, right? Because it's lower than my cost average. And if it happens or not, in within whatever this month is, people are expecting Roy and Kitty to tweet or not tweet or whatever. It's for you to decide, Do you want to stay? Do you want to go? It's up to you. But as far as like the company, oh my gosh, like people, you need to stay focused on the company side, not just the price point, you guys. Price point is for you to be like, okay, should I buy more? Or should I wait? But if you consistently adding, that's why dollar cost averaging is so powerful, and do it consistently. Every week, every day, every year. I mean, some people do it every year. If they have tons of money, right? Millionaire, billionaire, whatever. They don't just buy every quarter like us. But the more the better. I'm sure there was some guy somebody who buy Bitcoin every day. I mean, $35 every single day, no matter what the price is. Guess how much money it's right now? Close to $1 million every day for 8 years or something like that. It's crazy, right? How consistency will add up to, I know 8 years seems so long to people for some reason, but I guarantee you it comes and by so quickly that you don't even know. Like, that's why I'm saying, like, people underestimate what GME could do in 10 years, but overestimate what GME could do in 2 years. And this is a saying that, you know, it's true for anything. Like, even your effort, even your own growth. People don't used to stick to something for 10 years to know that they could be great at something because it's too long for them, right? But if you could stick with something for 10 years, you're going to reap the reward so much more. I wish I knew this, 10 years ago. Then I would have, been set already. Can you imagine buying Bitcoin every day, like $5 a day, for 20 years since its inception? Crazy. That would be crazy, huh? But anyway, so again, the same way applies here. Obviously, Jimmy doesn't, get enough credit because the press have been suppressing the good story on this company, good narrative on this company. But I guarantee you, when they're ready to pump it up to you, they're gonna be they'll be positive. They'll bring somebody positive to talk about it. Say, oh, you know what? Actually, Jimmy's not that bad. But they're gonna wait until it's over here, up here, right? Because they want to entice people to add more money to the bucket, and so just so that they get to drop it and scare people out of their own position. It happens over here, you guys. You see how much, like, how scary this was if you buy it over here? Yeah. In a couple of days, you're like, drop down, poop sandwich over here. And then the next day, what happened? Boom, right? I'll go back up again. So again, a lot of story yet to be told in this company for years to come. So if you're not buckling in, you're not going to understand this growth here. You're not going to ever reap the benefit, at the end, because you're just too short-sighted. You don't stick to anything to make things matter in your life, to the point where, you're willing to fight for it. When you find somebody, and just relationship or whatever, if you're not willing to fight for what matters, you're gonna be in the world of hurts later on. Because, when you go, eventually, this is more philosophical than anything, okay? You would be reflecting on, okay, how many relationships did I form? How many people are in your life right now? You could rely on. And will they come to your rescue when you need them? And yeah. And oftentimes you would reflect, okay, how many people in my life are willing to do that? See what I mean? And then if you have less, obviously that's going to be painful. Same way with your investment. You need to spend time, getting to know your investment, okay? Just treat it as a people in your life. And if you pick the right one, obviously they're going to stick around. And if not, then yes, your investment is going to go to shit. But, it's like, and then you learn. It's like, okay, next time, not this one. Next time, you gotta be a little bit more careful. All right, you guys, I think I'm babbling long enough. I give about the same amount of shit what the media say. As I do if Roy and Kitty post. Yep, 0. Yes, for sure. I mean, Roy and Kitty probably know that too. It's not like he's the. Yes, he has a lot of sway in terms of algorithm. It's not the media, you guys. Not the media. It's algorithm that is placed on his Twitter on his post. Retail cannot react this quickly. You guys, look at this, okay? The minute he posts, what happened? Pre-market, boom, done. It's like, really? Retail just wake up and then buys? No. It's a algorithm. Beep, beep, boop, boop. Okay? Have you heard about that? Beep, beep, boop, boop. It's just doing its thing based on the post of Roy and Kitty. And Roy and Kitty know that. Yes, he take advantage of it. Not so much retail. Yes, retail who are just so surface level. They don't know anything about the structure of the markets, how it's being traded. They just assume something. And that's what the media is good at. Is finding reason for the stock to go up and try to explain it the worst way possible. That doesn't even, come close to the truth, but you think it is the truth because you trust the media, right? The only people that will benefit more is the people that know the structure of this company. And structural, not company, the trading structure for this particular stock. How it trades and the price movement and all that stuff. But yeah, so, oh my goodness. My nose has been stuffy and I've been trying to clear it, but I feel like I'm getting worse right now. So I'm gonna let you guys go. Thank you so much for joining, you guys. I don't know why you're like listening to me just babbling, but appreciate it, much appreciated, much needed. But yeah, see you when I see you.